Hey, I'm Adam Jusko from PropMoney.com. In this video, we are going to talk about hard pulls versus soft pulls, also known as hard inquiries versus soft inquiries on your credit report. What is the difference between them? How does each one affect your credit? But before we do that, I'm going to ask you to please subscribe to this YouTube channel if you have not already, and if you have already, I thank you for doing so. So if you are someone who is building or rebuilding your credit, the idea of a hard pull versus a soft pull, or a hard inquiry versus a soft inquiry, could matter to you if you are really counting every single point on your credit score. If you're someone with a longer credit history, a higher credit score, you might not really care all that much about a hard inquiry versus a soft inquiry because you are doing well enough that each individual point isn't that big a deal. But if you are building or rebuilding, the hard pull versus the soft pull can make a difference, especially if you are someone, I think, who is rebuilding and you may be going through a process where you are trying to get credit and maybe having a little bit of difficulty getting there. So let's start with a hard pull, also known as a hard inquiry. A hard pull is done when you request a bank or other lender look at your application and give you either a decision on an application or give you an offer of a loan with very specific interest rate numbers. So it is you asking them to do that. So in order to do that, they need to look at your credit report and see exactly what has gone on. So they want to look at your credit score, but then they're also going to look at some specific things in terms of how many other inquiries you have had, how long your credit history is, and all of those sorts of things. So you're asking them to take sort of a deep dive on you, and when that happens, that is a hard pull. So after the banks or other lenders have checked with the credit reporting agencies, TransUnion or Experian or Equifax, or maybe all of them, that hard inquiry is going to go into the history of your credit report. And so the way credit scoring models work is those credit inquiries, those hard pulls, factor negatively in your credit score. The good news is they don't factor very highly and they don't factor for very long. So if you have a hard pull, say you went after a new credit card, it could affect you as little as maybe 3 to 5 points. If you have a shorter credit history or maybe a bad credit history, it could be a little more, maybe up to 10 points. But if you have a single hard pull, that's not necessarily going to hurt you very much. Now, if you have many hard pulls over a short period of time, it could hurt you. The good news is those hard pulls do go away fairly rapidly. So if you applied for a credit card today and had a hard pull, it would go on your credit report. It would stay on your credit report and be part of that credit score calculation for the next year. After that year was up, it would still be on the credit report. So if someone did sort of a deep dive on you, they could see it, but it no longer would be a factor in the actual credit score, the actual number that you look at. So it doesn't really last very long. So you don't have to worry so much about the hard pulls unless you do a lot of them in a very short period of time. Now, one of the things that can happen with hard pulls, especially if you are someone that has maybe had some credit problems in the past, is that if you go after credit, you could get denied for credit, but you still have that hard pull. So you don't get the satisfaction of being approved for something new, a new credit card or a new loan, but you still get that damage to your credit score. And if you go to one lender and they say no, and then you go to a second lender and they say no, and you go to a third lender and they say no, you're getting ding, ding, ding. You're going to lose those points over and over again, and none of them have actually said yes to you. So you're not getting the credit card, you're not getting the loan. So that can be a point where people get themselves into some trouble. They lose a good chunk off of their credit score without actually getting the thing that they were going after. And we'll talk about sort of what to do with that situation in a minute. But first, let's talk about what a soft pull or a soft inquiry is. A soft pull is when a bank or a lender basically wants to market to you and they check your credit, but only in sort of a vague way, a cursory way, to see if you are someone that might be right for a particular product. So maybe they look at your credit score, maybe they look at your income or where you live, and then they send something in the mail to you saying, hey, maybe you're interested in this credit card. When they do that, that is a soft pull, sort of a vague look at your stats, and then they mark it to you. You didn't ask for it, and so it does not hurt your credit score whatsoever. So it's a soft pull. Where a hard inquiry does hurt your credit score, a soft pull does not. And that makes sense because you did not ask for the loan. You didn't ask to fill out an application or anything. They just looked at your credit history a little bit and then sent you something to try to market to you. Now, while that might sound fairly straightforward, in some cases it's hard to know if you're getting a hard pull or a soft pull. For example, let's say you were interested to know what credit cards from Discover you might qualify for. So you went to their website and used their pre-qualification or pre-approval tool, gave them some information about yourself, and then they told you a list of products that they think that you could qualify for. So is that a soft pull or is that a hard pull? Well, it's actually a soft pull in that case because you didn't ask them to approve you for a specific card. You just said, here's kind of some of my statistics. What do you think I would qualify for? And they would tell you based on what they know, based on their history with other people with similar statistics to yours, here are the cards that they generally get approved for. That doesn't mean you are approved, it just means that's generally who gets approved. Now, if you go the next step and you say, okay, well that card looks great, I want to apply, and they ask for more information from you, then at that point when you say, yes, I want the card, I want you to, say yes or no to me, I want to know what my interest rate is going to be on that card, all of those things, that's when the hard pull happens. So they've gone from this sort of high level place of, yeah, your statistics are similar, to now we're going to look at you very specifically. So then they're going to go further. They're going to look at how many other credit cards have you applied for, how much debt do you have on those other credit cards, a lot of more specific things that maybe they didn't do in that pre-approval or that pre-qualification process. So you start out with the soft pull when you're just asking, but then when you actually apply, that's your hard pull. And there are probably some instances where it doesn't even occur to you that a hard pull or a soft pull has come into play. Say you have a credit card that offers you a free credit score every month or every 3 months. Well, they have to go to one of the credit bureaus, TransUnion, Experian, or Equifax, and get that free credit score for you. And so every time they do that, that is a pull. It is a soft pull because of the fact that you are not asking for credit. They are not giving you a new loan or giving you a new credit card, but they are still checking your credit report, checking your credit score in order to give that to you. So that is a soft pull and it doesn't hurt you. Now, sometimes whether you have a hard inquiry or a soft inquiry could depend on what bank you are dealing with. So some banks, if you have a prior relationship with them, if you apply for a new credit card, even though they are going to do that sort of deeper dive on you, they're going to treat it as a soft pull because they already have a lot of the information about you from your own track record with them. So American Express in particular is known to oftentimes use only a soft pull if you already have an American Express card and you apply for another one. In other cases with other banks, they may have done a hard inquiry, you may already have a credit card with them, but if you come back to them and you want another credit card, they're going to hit you again with another hard inquiry. Same thing with credit line increases. Some credit card companies, if you already have that relationship, they're going to do a soft pull. They're going to look and make sure nothing's changed drastically in your credit report, and they'll give it to you, and you're not going to have any hit to your credit score. You're going to get that soft pull. With other banks, they are going to do a hard inquiry. They're going to treat you almost as if you were a whole new card holder, and they're going to do that full inquiry, and you are going to get docked a little bit on your credit score. One other wrinkle on how the hard pulls can affect you: when you apply for a new credit card or an auto loan or a mortgage, that bank or other lender can decide how many of the credit bureaus, TransUnion, Equifax, or Experian, they want to pull from. So when we say pull your credit report, they have the option to pull from just one of those, or they could pull from two of them, or they could pull from all three of them. So if you have, I don't know, say American Express pulls from Equifax. So if American Express pulls from Equifax, that is going to ding your credit report and your credit score a little bit with Equifax, but it's not going to have any impact on TransUnion and Experian because they did not pull from them. So if you only get pulled from one, that score is going to be a little worse with that credit reporting agency, and that's why you sometimes will see that you'll have a different credit score. In fact, you'll almost always see that you have a different credit score between the three credit bureaus, even though they're usually fairly in line with each other. So that's another thing that happens. Some of the credit card companies, some of the auto loan or mortgage loan lenders might pull from all three. Some of them may only pull from one, and so then your credit score is going to be a little worse with the one that they have actually pulled from when you do that new application. And some people that are really watching their credit scores hate it when a credit card company or a loan company pulls from all three of the agencies, because then they know they're getting dinged 3 times with each one of them. If they only pull from one, they know that credit score is going to go down, but the other ones are going to remain a little bit higher. Capital One is known to usually pull from all three, which makes some sense because Capital One often lends to people whose credit scores are a little bit lower, so they probably want to make sure that they check and make sure there aren't any glaring red flags within any any of the agencies, but that also is something that upsets people that apply sometimes for Capital One cards because they know they're going to get that ding on all three scores with TransUnion and Experian and Equifax. So I said earlier that sometimes if you are trying to build or rebuild your credit, you could be getting turned down repeatedly and getting hard inquiries on your credit report over and over again, and it could put you in a bad place where your credit score is actually going down, but you're not getting any loan or credit card on the other end to at least make you feel like it was worth the hit to your credit score. So that is the time that I would tell you to use some of what I talked about earlier, which is the potential for pre-qualifications or pre-approvals. So on the credit card end, two examples are Capital One and Discover, where you can go in and at least on a high level, they can look at you and tell you what cards you should be approved for. And if you go and you do one of those pre-qualifications or pre-approvals and they tell you that you're not eligible for anything, well, then you know you probably shouldn't apply and not take that, hit to your credit score. If they tell you that you probably are going to be approved, well, then that gives you a lot more confidence that you will be able to qualify for that card. Now, it's no guarantee. You could go in and they could say, oh, well, you know what? You applied for 12 other credit cards over the last year. We're not going to give you another one. We didn't realize that when we did the pre-approval because we didn't look that deep into your history. So it's not a guarantee that you're going to be approved, but when you use those pre-approvals, those pre-qualifications, and you do only a soft pull in order to get there, you can have a much better idea of whether you're probably going to get approved or not. And if even those pre-approvals and pre-qualifications aren't getting you any joy, that's when I would say you probably should look at a secured credit card where you put down a security deposit in order to get a credit card in order to build or rebuild your credit. Now, you could even be turned down for a secured credit card, but most people, unless they have a really terrible credit history, are not going to get turned down for most secured credit cards. And so with those, you put it down a security deposit, you get a credit card that you use just like any other. You make your payments each month. And if you do it well, over time, you're going to build your credit score. And then hopefully, eventually, you're going to get to a place where you qualify for more unsecured credit that does not require you to put down a security deposit in order to get it. We've done a lot of other videos on secured credit cards if you want to take a look at those, if you feel like that's the direction you need to go. So the hard pull is when you want a firm commitment on a new credit card or a loan. The soft pull is when they are getting some information on you, but they are not giving you a concrete offer of credit. If you have any other questions, put them in the comments section below. Otherwise, I thank you for watching, and as always, please go to proudmoney.com where we do credit card views, we talk personal finance, we talk deals, and all sorts of other fun stuff too. Thank you for watching. Bye.